Hey guys, Stock Saturday, and we continue to get very much turbulence and volatility in the market. I expect everyone is up following sort of last week's bloodbath, as long as you're in sort of some sort of stocks. We've had on the S&P 8.27% gain in the last 7 days. So it was obviously after the Liberation Day turmoil. And on the Nasdaq, 11.44%. Again, after a sort of even steeper drop. So I think it went worse than that, 12%, and is down, or did get to a point down 23%, I think 27% sort of intraday. So yeah, it's been big. I am in the middle of those two this week, about 10.5%. So yeah, reasonable gain, a bit more than the S&P. So happy enough with that. And I have taken the big decision to withdraw 20,000 out of the premium bonds and put it into the ISA rather than sort of sell a load of positions in here and move them into the ISA. Just sort of thinking, I put 50,000 in the premium bonds basically to allow a bit for tax that I owe this year, and then allow sort of some for future tax, but I sort of now don't owe that yet, so I thought I might as well take the opportunity and buy the dip. Obviously didn't get the exact bottom, but yeah, sort of hopefully that will be a good decision. And still sort of trickling this cash in the invest account into holdings as well. This week I bought a little bit more CF Industries and FMC Corporation, sort of a little bit more of the food pie, if you like. Ingredients sort of being a much larger position of those. And Adecco Agro, sort of still talks of them sort of getting partially acquired, maybe sort of majority acquired. So I'm just kind of leaving that as it is at the moment. So yeah, we'll sort of see much more volatility, I suppose, keeping an eye on things that I've sold before as well, whether I would want to get back in, but I haven't seen anything super attractive just yet. Stellantis sort of really having a lot of struggles with tariffs, import bans, and that sort of thing. Glencore sort of really struggling, and Rio Tinto and Vale sort of looking fairly unhappy with themselves. So no earnings this week, but a little bit of news. We got Hive Digital's operational update for March. They're always a little bit late, so tends to come out a little bit after the others. They mined 108 Bitcoin for the month. Obviously, much lower hash rate than my other miners that I look at. And yeah, they've been sort of spending some of this balance to further the Paraguay site. So brings them to 2,201 Bitcoin. They were at sort of 2,600 nearly not so long ago, but I don't mind sort of selling a bit of Bitcoin to pay for the Paraguay site. I think that's sort of fairly prudent rather than sort of heavy dilution still. They note sort of year on year it's slightly down, 4% down, obviously a bit more down from the peak. But yeah, average hash rate of 6.3 exahash for the month, increasing very slightly. Good to note their efficiency is already at 20.7 joules per terahash. They obviously want to get that low, but yeah, I mean CleanSpark I think are at 17, so they're not quite that far off. Sort of Riot, people like that at like 22.5, 23, because they're not focused on upgrading. And the Paraguay site they're saying is going well. Phase 1 is energized, and they'll now start increasing hash rate sort of at a slow pace over the next few months. Noting though that they do keep being cagey with the timescale on this. They're now sort of saying 6 exahash to 25 exahash by the end of 2025. They were initially saying sort of by the end of September, and a reasonable amount of that sort of in by June. So yeah, hoping it doesn't take until the end of the year. I have been buying quite a bit more Hive on the options account, but we'll have to see. Got some really interesting news that I think I missed last week. TSMC, there's been rumours of them sort of taking over Intel's fabs in the US and sort of running a joint venture essentially where they would run them and own a stake in those fabs, not in Intel themselves, but just in the fabs. And there were sort of talks of a 50-50 ownership on that. This has sort of now been confirmed. The joint venture is happening. They're taking a 20% stake, so not quite as harsh as people were calling it. 20% stake, I suppose, is fair enough. And yeah, they're sort of talking the end of Intel. Basically, Intel used to be a giant in the CPU industry. I think they probably still are. They have a good share of the server market and sort of high performance computing, if you like. Obviously, Nvidia are sort of taking a huge share of that now with GPUs, but you do still need CPUs, and people seem to be maybe not reluctant to use AMD, but they do like the sort of tried and tested Intel for the most part. So Intel got a new CEO recently to replace Pat Gelsinger, who I sort of think was maybe harshly removed. He was removed in December after his ambitious turnaround plan failed to provide notable market share growth or profitability. You sort of think, funneling money into new fabs. Those fabs, I don't even think really got fully off the ground yet. So expecting it to provide profitability growth is a little bit, thinking a little bit too soon, short term. But yeah, they've got rid of him, and I guess they were saying they were losing too much, so they've decided to take TSMC's involvement, which is encouraged by President Trump. So yeah, quite surprising. He doesn't want any part of Intel to be fully foreign owned, so TSMC would be limited to under 50%. Whether they're going to sort of be buying into this more, it's a little bit unsure because it's 20% so far, nothing close to 50. But yeah, interesting. And we got the monthly revenue numbers for TSMC, huge, 285, nearly 286 billion. This is 46.5% year-on-year change, slightly below the January number. And obviously this is all pre-tariffs, pre-Liberation Day, if you like, before we knew it was going to be quite as bad as it was. Huge tariffs on Taiwan. There was sort of talks that people were front running the tariffs anyway before knowing that they were going to be this bad. And yeah, you could have seen sort of Q1. These numbers for Q1 could have been quite a bit juiced, and maybe we get a quiet sort of April, May, and June. Depends. We've obviously got a 90-day pause now on the reciprocal tariffs, so pretty much everyone's just at 10% except China. Sort of ramp theirs up to 145%, I think, currently. Changes every day. So yeah, we'll sort of keep an eye on these numbers going forward, with the sort of expectation that maybe they'll be a little bit worse than this. But yeah, that's not too harsh. Obviously, this is all of Q1 now, so should get TSMC's results in a couple of weeks, I would have thought, and I'm guessing they're going to look absolutely knockout. But we'll have to see what sort of guidance they give. And checking in on gold, doing rather well. It looked like it was sort of not taking Liberation Day particularly well. Guessing this was partly due to margin calls on the stocks and that sort of thing. You sort of sell what you can to pay for margin calls. We all know people use far too much leverage, as I always say. You don't want to be getting margin called. And yeah, gold was sort of saying over $100 drops, has sort of then been followed by over $100 gains. This was sort of very, very short-lived drop. Did get below $3,000 again, which is sort of crazy to be saying it crashed below $3,000, but that's where we are. So from 3,150 before the sort of tariffs announcement, within a week, within a couple of weeks up to 3,230. So new all-time highs. Things are looking very, very good. Look on the longer term, he's basically going parabolic on a linear scale, I suppose. You can't sort of put this into a proper log scale, but yeah, all looking good after a sort of relatively long consolidation in the COVID period. So yeah, looking on close on $1,500 gain from the 2022 bottom. So very, very strong. Not seeing the same move quite yet on silver. We're sort of meandering around the same sort of $5 range, really. On the 5 year, it's up quite a bit since the 2022 bottom. Is actually about the same percentage up as gold since the bottom when you look at it. It just doesn't always feel that way. Obviously on the sort of all-time chart, we haven't even broken anywhere near all-time highs yet. Sort of $50 back in 2011 and, well, $50 back in the 80s, although that was sort of heavily manipulated and didn't spend very long there at all. But yeah, certainly $50 from 2011. You sort of think inflation adjusted, that's an awful lot less now. So yeah, we'll have to see where that goes. Copper has sort of been incredibly volatile. From the sort of 523 high, I think it got slightly higher than that on an intraday. Looking at the sort of Liberation Day fiasco, got down to $4.09, $4.08, and has sort of recovered to 454 in relatively quick succession. I think quite a bit of this was stockpiling, supposedly, because you've sort of seen quite a divergence between the US copper price and the sort of global copper price, London copper price, for example. So yeah, there was sort of talks that this wouldn't necessarily last, but yeah, over $4 I think is pretty good. 450 is sort of fairly good indeed. And if we can get back above 5 sort of over the long term with supply deficits, then yeah, I like the miners. What I don't like, and people have sort of asked in the Discord about, people like Rio Tinto and Vale, obviously previous holdings of mine. Do we get back into Rio Tinto? I think people tend to just sort of think of commodities all as one group that can just be bought, and see people like Rio Tinto as just a play on commodities, when really they are largely a play on iron ore, and Vale sort of even more so. And iron ore sort of isn't really going anywhere. You look on the 5 year chart, it's sort of just, I've shown this on the 5 year before, and it isn't changing, just sort of consecutively lower lows back below 100, and sort of not seeming to be wanting to rise. And more sort of fundamentally, over the next 3 years, we're projected to have an awful lot of supply come online from sort of various countries, and so it could be in supply surplus for sort of 2 or 3 years, where sort of copper is looking like to be in a deficit. So you don't want supply surplus in your commodity, because that just puts a huge dampener on prices, unless we're going to have some crazy new demand, which there sort of isn't any indication that we would get that. You get some in renewables, but then you might lose some in sort of power plants, sort of traditional power plants, whereas copper has a much greater use in sort of everything that he's getting, or at least being planned to do. So yeah, I don't really see the appeal of iron ore heavy miners like Rio Tinto and Vale, and sort of much prefer to focus on someone a bit more copper focused. I really think this is a mistake, sort of people talking about Rio Tinto and Vale as a copper play, like it's about 10% or something, and that doesn't count as a copper play to me. So, looking at the economic news, we got not a lot sort of all through the beginning of the week, but Thursday, the all-important CPI numbers for March in the US were across the board quite a bit lower than expected, especially considering the sort of what people are saying is front-loading of materials before the tariffs. So yeah, you'd expect sort of they were paying more to sort of quickly import those, but yeah, very low numbers, 0.1% on the monthly core CPI. Last month was 0.2. It was expected to go up, and yeah, 0.1, so 2.8% year on year. That's the sort of more important figure. We'll wait and see what core PCE is. That's the one the Fed care about, but good sign, down from 3.1 to 2.8%. Obviously, they'll say they want it at 2. It does seem like they're more happy with sort of 2.5 to 3. So 2.8, very nice. And on the headline side, it's probably down to oil's large drop, I would have thought, but negative 0.1%. So yeah, very large. But you know, Fed and sort of other people always say that they don't focus on headline because it is volatile with food and energy. So yeah, and the jobless numbers continue to look very good. We've sort of seen people focusing on the challenger layoffs and that sort of thing, but that is sort of, as far as I know, people being laid off. It doesn't sort of say whether, you know, those people just go and get another job the following week. You know, if they're highly skilled people, then maybe they do. And if initial jobless claims aren't going up and continuing claims, so, you know, people that were sort of on the dole last week, there are now, what is that, 43,000 people less on the dole. So, yeah, don't really see any issues there. Friday, we got some incredibly strong GDP numbers from the UK. Not really sure what is driving this. I haven't looked into it too much because basically I'm not really a UK focused portfolio anymore, so I don't have a lot of exposure to it. It's good to see the home country sort of doing quite well, but yeah, doesn't really sort of affect my portfolio anymore, I guess, and sort of our central bank activities and that sort of thing doesn't really have a huge impact on the world. So yeah, shame to not be sort of as patriotic as some, but there you go. So looking at the portfolio, the ISA side is sort of looking a little bit more healthy with crypto and gold sort of doing well. Certainly on the Friday, you can see everything sort of 7, 5, 6%, some 3% gains, and it's sort of reasonably well up on the week. Obviously, you know, taking about 20,000 out of this from sort of the ISA gains. That wasn't included in my sort of 10.5% return, of course. Yeah, looking pretty good. I spent about £2,800 of the deposit so far, adding to Hive Digital and Iron. So I bought Iron in the option side, and yeah, there's sort of potential that they don't sort of get close to my targets by the end of the year. But I think just holding the stock as well sort of gives me potentially a little bit of upside. You know, I'm looking for Iron to sort of get to 15, 20, maybe even $25 or more. But you know, if it were to get to 20, then my options may not do that well. But the stock would still be sort of nearly 4x, and sort of similar on Hive. I've got a large position of them sort of going above $10. Oh yeah, that's my average price. They're at $1.48 now, even worse. But yeah, if they don't sort of get to $10, then the options don't do particularly well. But you know, the stock again would be a 6x nearly from that, more than that. So yeah, we'll have to see. But I am kind of tempted to sort of average in a little bit more of this cash over the next month or so into these miners. It's a risk, obviously, and it's risking my ISA money now, what was in premium bonds, but yeah, got to take that risk sometimes. On the Interactive Brokers ISA side, Pan American and KGHM sort of recovering a little, 25.88 on Pan American. So reasonably good. Still considering switching this to Equinox Gold. I think sort of Pan American do look a little overvalued at the moment, but yeah, haven't pulled the trigger quite yet. Maybe if we sort of get a real hard divergence between the two, I might pull the trigger on that. KGHM looking still really solid as well. They've obviously taken a knock with copper and silver as well. Sort of silver dropping $2 a day, a couple of days in a row was a big hit. But like it going forwards. And so on the option side, I know not everybody sort of particularly cares about the detail on these, but some do. Obviously, it's high risk, potentially high reward, but isn't showing that reward at the moment. It's obviously better than last week, and I've sort of been making quite a fair bit of moves. What I was looking to do was sell the January 2026 Equinox options and rebuy Jan 27 to sort of give me an extra year, because I think Equinox are going to have, a fairly good rest of the year, but sort of better year in 2026. So yeah, I kind of wanted to do that. I've sold a lot of the 2026 options, but sort of price was rocketing up while I was doing this, and the 2027 sort of ran away from me a little bit, and I didn't really want to sort of chase the price, lots and lots higher. So yeah, I've sort of dropped this holding by quite a bit and not been able to rebuy, but I do have quite a bit of cash for if the price does drop a little again. This has sort of gone from about 6,000 in the red to 7,000 in the green. So yeah, it's done reasonably well, but I wouldn't mind a little bit of a drop just to buy back into that. Kerr Mining is up about sort of 50%. The options position for the week, so it's doing well. Himax has sort of barely moved. Hive Digital, I have been buying quite a bit more. This sort of number is probably a little bit juiced and will come down over the next couple of months, because I do hold quite a bit of June this year options, and those are sort of at I think $5, and maybe some of them even $7 strike. So it's at 148 now. I can't see it going anywhere near that in the next 2 months. So those will expire worthless, I expect. But those are all currently about £200 of this position. So yeah, they're basically already in the loss figures and sort of an irrelevant part of the portfolio. It's just that'll come down about 200 contracts or something. But I have been buying some January next year $4 strikes, so much lower. Going from 148 to 4, I can't see as any trouble at all if we get a decent sort of Bitcoin run for the end of the year. So yeah, we'll have to see. They seemed relatively cheap, I thought, and a decent risk reward. So we'll see. Riot continues to bleed. Obviously, they're not doing super well. I have been buying a little bit more iron as well. Still think iron look pretty good. Could really do with a sort of business cycle increase, and people get a little bit more keen on AI, and then get a nice AI deal, because they have got huge site. I think sort of 2 gigawatts up for grabs basically. 2.75 in total, including Bitcoin mining, but 2 gigawatts they're sort of looking to sell basically, or lease. And then yeah, little clean spark position, but it's sort of much smaller than all the rest, of course. So yeah, fair bit of cash. I do have still about $5,000 to potentially add to this. The cash is obviously just from selling Equinox options, but yeah, potentially another 5 to go in if I see something lucrative. So yeah, interesting. Leave your thoughts in the comments below. How you guys are doing? How you taking sort of the aftermath of Liberation Day and all of this gain? And like and subscribe. See you soon.